Next, are gold miners about to explode higher? Gold prices have surged, but mining stocks have lagged behind a bit until now. Is this finally the moment when miners catch up in a massive way? Mike, you sent me down this gold miners rabbit hole, which is pretty funny for me because when I started trading, I was trading gold miners. That's like what I spent my whole time doing, and I'm looking at SA reports and exploration companies and junior miners versus everything.
Hmm.
And I was really fascinated with it until I started trading bonds, and then I was like, well, I don't need to trade gold anymore. Bonds are I don't have to worry about some junior miner what they're doing. I just buy the U.S. Treasury and deal with that.
Sure.
But still, it's a fascinating thing because gold has ripped, right? Gold is is it at 3,000? Did it even break 3,000 yet?
Yeah, where is gold now? So
Almost 29.90 91.
closed at
Yeah, it hit a
29.82. So
high.
almost there. Nice little push yesterday. Almost crossed the psychological barrier there at 3,000.
Yeah, I mean,
Um,
it even closed. There was a high of 3,017 on the futures contract. I
oh,
don't know about
really?
spot.
Okay. So a
Yeah.
little bit of divergence there. But yeah, I have been paying attention to a few companies that have started to receive a lot of trading volume. And there were a few companies that actually popped out in terms of overall volume that started to appear on the charts. There's a company called ORLA Mining, which has received a ton of attention lately from traders. New Gold Incorporated and another company called Equinox Gold Corp. These three companies started to started to appear on a screener of mine because they're also undervalued companies from a fundamental perspective. But as we kind of look at the comparison of them all in the last year, just looking at the last 1 year chart relative to the S&P 500, these gold stocks are soaring. NGD is up 89%, ORLA is up 136%, while gold's up 37% and EQX is up 35%. S&P is only up 9% over that same period of time. Even year to date, all of these current positions are looking pretty impressive, with ORLA up 48% since the start of the year.
So what I've been loving about Mike, your analysis of stocks now over the last couple of months I've been paying attention to is that I mean you keep finding these meme plays like these GameStop level moves in these charts.
Sure.
Like it was ever since crypto, I sort of like stopped thinking about stocks moving 100%, 200%, 300% or more. I just
Right.
put that away, and turns out no, you've proven to me they are everywhere. And more so, is it more so now that the indexes are like value is outperforming in some locations? Like, sorry, it's a stock pickers market basically, that you can actually find things and have a thesis play it out and actually make 300% on a move.
I think that's true, especially with sort of the rotation that we started to see as large cap stocks reached an all time high. People were a little concerned that that market, that part of the market, or that sector in terms of market cap was a little frothy. There was some sector rotation into mid caps and small caps, and these companies are starting to see some action. And usually, when you start to see volume flow in these smaller cap companies, they can move really fast because there's less liquidity, and there's a lot more excitement from a retail perspective, and it can pick up really, really fast. So yeah, to your point, there are definitely like sort of meme crypto style plays here that can move very quickly in less than a year, or even in this case, less than three, I guess a little more than 3 months. With Orla up 48%, that's definitely crypto style moves here.
Well, I was all my go-to people that I used to listen to all the time before shifts Katsuna. I couldn't find a bunch of these people to get an idea of what's going on, just get the rundown. But there was this one guy, Garrett Goggins, who I thought had a great interview with at Kiko Mining, giving a good breakdown on a few things that are actually affecting the gold price and on how to choose a gold miners to invest in. So I just
Let's
want
hear
to
it.
play a couple of yeah, let's play a couple of clips on that, and then I'll get your thoughts. All right. So we're going to start off here with the idea here of the difference between investing in gold and GDX. So there has been like this discrepancy in the charts. Actually, let me just pull that up real quick so we can see it before we start. Where the performance hasn't been as exciting for the mining sector as it has for gold. So let's say we just use GLD. Let's say. what we're seeing here at the top is GLD. Let's say at the bottom we put GDX. We're seeing that GLD broke above previous high, and we haven't even done that on the miners ETF for VanEck. Same thing if with GDXJ, the junior miners. We haven't retraced the highs, and then even on some of the big names like Barrick Gold. No, not that one. Barrick Gold. Also, we get this downtrend. So, a lot of people have been like, "Hey, why is my Newmont mine and why is my Barrick Gold not going up? Why are these things not skyrocketing?" Gold's basically at 3,000. That's the bet that people wanted to play, and uh, Gary Goggins does a great job, I find, in explaining some of these details. So let me just pull that up.
You get the new electric back.
Now, do you think?
You know what? It's really wild because a lot of people show the charts of the GDX gold being up here, GDX being down here. They're like, all right, there's the opportunity, right? Like the jaws are going to close. Like that's a myth. Like the GDX is never going to catch up to gold. Why? Because you're comparing apples and oranges. You're comparing gold, which is the world's best independent asset that's a store value for 1,000 years, that has no expenses, it's unencumbered, versus a stock, right? GDX is made up of the gold stocks. The only thing that drives gold stocks is increasing free cash flow on a per share basis. And you get a mining company, the miners have all sorts of expenses, right? You got to pay your miners, you got to pay the management, you have options, you got G&A, there's a lot of expenses. So, I believe we're set up to have a good rally in the GDX right here, but you need to find the miners that can drive free cash flow on a per share basis, because that's what the stock price follows. And I follow this very closely. I follow the big 5 miners on a free cash flow to share price since 2015. The average miner is 25%, average large cap miner is 25% undervalued versus free cash flow per share since 2015. This is the biggest opportunity since 2020, and before that 2015. GDX took off and ramped higher, 100% higher over the next few months. And Newmont's earnings today just like proved it out, because the discount could be explained away by if they came out with bad earnings, rising costs, and therefore they're not making as much free cash. But Newmont did the opposite, right? They lowered their all-in sustaining costs to around 1450, and
5% year on year. Yeah.
And they increased production. Like they're generating $1.6 billion a quarter. That's based off fourth quarter gold price. Never mind the 2,900 gold price we're in now. That's like $7 billion. That's a ton of money. That is free cash flow. That's how to drive the share price. Free cash flow is used to pay dividends, buy back shares, and do smart things to, do accretive things to drive shareholder value.
So that's like, to me, it feels like that old school way of thinking about stocks, like free cash flow, efficient companies, cut the pork, get good management, and you're like, okay, yeah, if they have that with an asset that with a base material that's going up in price, as long as they keep going down, that free cash flow keeps increasing. And then later on in the interview, he talks about the idea of then if you smartly use that in order to buy back shares, in order to give dividends, it becomes more attractive for investors to come to the market, and so you get this lag from the price to directly to the miners that are actually more effective.
Right. I think it also kind of highlights a potential error that one can make when observing some of these individual holdings as a potential pairs trade. This is a good one to observe if you're measuring sort of the co-integration between the two to determine whether or not these are actually converging and diverging in a way that makes this an appropriate mean reversion play, right? Like
Between
his point
GDX and gold.
and gold. Yeah.
Okay.
Let's say the other side of your trade, you were holding a gold ETF or a gold futures contract, trying to profit between those divergences isn't really effective, because to his point, you're comparing apples to oranges. So, of course, if you were doing this very quantitatively, you'd probably already see that there's really not a high co-integration between those two symbols, and you probably wouldn't trade it anyway. But I think it's an important distinction to make between what you're actually buying when you buy into the gold industry.
That's right. All right, so let's see what he has to say here. I thought his comments here on the price of gold and the effect that the price of gold has on these miners was interesting.
Now, you mentioned royalty companies, royalty and streaming companies. They've outperformed gold companies for a number of years. As with the kind of market we're in now, gold at $2,900 per ounce, are gold companies now in a position to sort of fight back and...
Yeah, the royalties outperform when the market isn't doing great. When we're in a strong uptrend like here, the gold miners do well. But the royalties do well, right, because they have fixed costs. When inflation pushes gold higher, it pushes costs higher as well, and that's what the miners struggle with constantly. I'd like to say that a lot of people, I'm out there on Twitter pretty often, there's a lot of people on Twitter that recommend low-grade moose pastures, right? They're like, listen, when the price of gold goes to 5,000, this stock is going to go up 50x. It's like, no, it's not, because when the gold price is 5,000, the costs are going to be, 5x, 6x higher, and the project is still going to be economic at 5,000 versus 3,000. So you need.
So the idea here is that if inflation is the thing that's causing the gold price to go up, then there's a bunch of input costs that also rise for the miners as well, and you have to factor that in as well. And so it could be that a poorly managed or poorly run miner is just as unprofitable at $5,000 gold as they are at $3,000 gold, which I think is a pretty fascinating. Which is why you can look at a gold stock and it's tanked. You're like, how is this tanked? Gold's at 3,000. How's it in the toilet? It's because you have to be efficient. My portfolio has a bunch of these gold miners that are just like not performing at all.
I think there are similar reasons that airline stocks as well as oil stocks are difficult to determine the long-term upside for similar exploration and mining costs that can change on a variable basis. So yeah, I think that's a fair observation here. I was kind of interested there in the moment in your outline about their take on the Fort Knox audit. I know we covered that a couple of episodes ago. Was there anything of interest there?
Absolutely, yeah. So he talks about. I thought it was interesting because I thought it was gonna be like conspiracy land, but it's not. It's very practical what he says here. So let's see.
Well, I like practicality.
Elon Musk.
Right.
Elon Musk wants to audit the treasury and audit the gold that's held at Fort Knox. And this is really gathering steam. Besant just talked that down yesterday, saying, hey, we did an audit last year, all the gold's there yet. But the thing is, the gold might be there, but it's loaned out. That's what bankers do. A bank's got cash. What do they do with the cash? Do they let it sit there? No, they loan it out once, twice, 10 times, 100 times, right? So that gold is there. It's just loaned out many times over. So they need to track that paper trail. And when they track that paper trail, they're going to find out who's been short millions of gold ounces, and those guys are going to have to buy back. That's what I think the tariffs are driving gold back to the United States. But I think the U.S. is reclaiming their gold. So all that whole paper trail, they're going to have to buy back their gold. That's what's been driving the gold price higher.
And another,
I find that to be so fascinating.
I do too. It's another exogenous factor that seems to be driving gold prices up. In addition to what we covered on what's happening in Europe right now a couple of weeks ago, that's another upcoming factor then that's worth considering.
Yeah, because when because what I had found so fascinating about gold years ago is that it was correlated very strongly with interest rates and the dollar, and so and you would have this inverse correlation between the dollar and rates and gold, except in periods where it is there's economic uncertainty about the financial system, in which gold could go up as well. But then the price that we were seeing on gold recently over the last year or so seemed to move beyond the economic uncertainty, because it started decoupling from like how interest rates were moving, long-term interest rates were moving. It's like, wait, interest rates are the lower interest rates go, so the more money you can get on the bond, the less gold is attractive, because bond is actually generating a yield. And so the idea is that if interest rates go lower, then gold can go up. But gold was going up whether interest rates were going up or down. And then it was also going up whether or not the dollar was going up and down. I was like, what is going on? The dollar's going up or down, interest rates are, so that means some other factor is pushing the price. And he suggests here that it's because the holders who are short gold, because you're short gold for a number of reasons,
are going to have to buy back to cover.
They know they're going to have a squeeze, that they're going to be squeezed out of it, and that this is a front run to that squeeze, or positions being cleared out, and that they know that, and what supports that is that idea of that the gold is moving from London to New York. That some of that movement has to do with it.
For sure. And the shortage and the disparity in prices between those two markets. Tom, how closely are you following the options market around gold?
Not at all anymore.
Interesting. Okay. I'd be curious your thoughts on that if we do this in another upcoming episode.
Okay, take a look at that. Yeah, you know what? I would do options on the futures contract, but I wonder even on the
ETFs.
Yeah, because I did a lot of options on options plays on the miners. Terrible idea. Terrible, terrible, terrible. No matter the wins, do not pay for the losses. It makes no sense to do that. My God.
Maybe it would have been better to be on the other side of that, selling premium rather than buying.
I just find it so difficult to sell options.
I see.
I can't sleep. If you're covered, that's one thing, but or hedged in some way. But I was never able to. I never found that as interesting. Whereas if you buy options on currency futures, that's like it's like almost feels like free money sometimes when it's going your way. I never worry about anything.
Right.
All right. The last thing I wanted to show from this guy's interview is his prediction for what could happen with gold over the next year or so.
Of tons, and it's not going away, it's increasing.
So it sounds like we're in the early innings of something that's going to go much bigger. So how do you think the rest of the year is going to play out? What are you telling your readers?
To be honest with you, I'm a fundamental analyst. I'm a CFA MBA from Boston. I value things based off free cash flow per basis. I'm gold. I like to be gold agnostic. I look at the gold price as being the cherry on top of the big ice cream sundae. You need to find miners that have independent value drivers. If you're investing in a mining company solely because you believe the price of gold is going higher, you're going to lose money. There's a lot of things. I follow the trough of the Lassonde curve, right? The first trough is exploration. Company Sanu Gold at Dyna just released 50 meters of 3.1 grams a ton. It's got the Lundins back in them. It's got Montage Gold back in them, and it's in a great gold district. That stock has ripped up higher. And once you discover a deposit with one good drill hole, it takes years to build it up, right? Like you got no ounces or reserves. So they keep drilling, finding more. The stock price keeps going higher. And then they reach a stage where they have a mineralization report, and then they need financing, and the stock price usually trades down then. So the second trough of the Lassonde curve is when they're at the trough, they go through financing, and you get NAV, right, which is the total value of profits from a mine, versus market cap. And there's a spread. Market cap is low, NAV is high. On first production, market cap should value NAV because miners are worth the most on day one of production, and then as they mine, the reserves go down. So there's tremendous opportunities I see in the market, and we don't need a higher gold price. Montage Gold trades for $300 million. And Kone's worth $2 billion at $2,900 gold. Rio 2, Alex Black did it before with Rio Alto. He's doing it now in Phoenix, in Chile, and that stock's trading at like 200 mil. It's worth $1 billion, and that's off 20,000 tons per day. A base case feasibility study, that thing ramps up to 80,000 tons per day. There's another one, Longcore Gold. They own a Dumby, and it's in the DRC. Yes, it's risky, but Mark Bristow with Barrick has been operating there successfully at Kibali for 15 years with no issues. Longcore Gold trades at like 40 million market cap, and a Dumby's worth $1 billion. That's like 30x upside. Just the value represented in the sector. So as they build out.
So I mean, this
Super
I just love this
fascinating.
passion about it. There's all kinds of different plays within the market there, and so like you already mentioned, Orla was up like 135% over the last year. AEM up 86%. Sanu that he's talking about up 500%. Montage Gold 116%. Sanu's on Canadian Stock Exchange, I believe.
Yeah, and so is Montage.
Yeah, so some of these moves are just, I mean, crypto people wish that's what's happening with meme stocks right now.
Sure.
We really want to get back into it. The last thing I wanted to say on that was right. So, but GLD, if you wanted to just play the gold play and you didn't want to deal with the miners or anything like that, GLD is mapping basically mapping one for one to the gold price. And there's an argument to be made that is such an effective ETF that it's actually draining money away from the GDX and GDXJ as people want to easily express their bullishness for gold. Before we jump into our final segment, let's take a moment to shout out TradersPost, the automated trading platform designed to take the friction out of executing your strategies. Whether you're trading stocks, futures, or crypto, TradersPost connects seamlessly to your broker or exchange, giving you the flexibility to automate your trades without missing a beat. If you're tired of being the bottleneck in your own success, it's time to let automation do the heavy lifting. Head over to traderspost.io and see how easy it is to streamline your trading. TradersPost, because your strategy deserves to run at full speed.